You're on mute, Dan.
Well, it's Friday. Good morning, everybody. It's Friday, October 4th. And this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 3 3/4 at 424.5. January soybeans were up a penny and a half at 10.66. And December Chicago wheat was down 10 1/4 at 5.93 1/4. This morning, the USDA announced export sales announcements of 116,000 metric tons of soybeans to China for 24. Also announced was 198,000 metric tons of corn to unknown destinations for 24. Non-farm payrolls were out this morning. Surprise in that data. They were up 254,000 in September. They were looking for a number closer to 150. So real positive there. The stock market actually rallied 200 points on that news. Unemployment rate also slightly lower, 4.1%. They were looking for it to hang steady at 4.2%. So with that, we've got 3 of the 23 days for harvest price discovery completed. Corn's right about 429 and soybeans are right about 1053. So we'll continue to monitor that as we go through the month here. Guys, we were talking a little bit before the show. It's bumping up against a lot of technical areas. We're going to have a nice weekend of harvest. It looks like little rain through the upper Midwest this morning, but I think that's welcomed from what I'm hearing. Outside of that, we've got, a really good window here to get stuff out. So Justin, maybe a few thoughts to wrap up the week and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, we're, been talking about it, but market's kind of rallied to where you would think they should if there was a short covering type rally like we've had, kind of testing the 100-day moving averages. Corn and wheat both got above it. Corn stayed above it for about a day, settled right at it yesterday, and then overnight broke right below it. So that's been a tough area to hold for most of these commodities. Wheat, I think, went and touched the 200-day and then went below the 200-day, then below the 100-day. So a lot of technical trading. I think there's probably some air gaps here. We've had a lot of short covering heading into harvest. So if there's any pause in that, fund buying or speculative buying, you can have some air gaps, below the market, when hedging comes in. So be curious to see what the managed type money wants to do here. My thought is that they're just kind of evening up here to see which way they want to go. You've got a lot of obviously geopolitical things going on. You've got an election coming up soon. So it could just be, we turned up technically, got a lot of, change of ownership, fund buying into farmer selling and, see what we think here. How yields finish up. I personally think either way, we're going to have a big enough crop that there's going to be a lot of hedge pressure with this window that we see. And as you start getting, tight on storage space at the commercial level or even the, on-farm storage, I think we could see some weakness here. So I'm mostly concerned about call it the next 40 to 65 days as far as being a bull.
Kyle says shocking that we've got a rally as crop insurance is being set.
Yeah. And if you really want to kind of play into that too, you would think as you get enough of that average October price settled in, called mid-October, and that floor is disappearing every day, call it a conspiracy theory or just call it kind of like it's a giant option trade. As those positions go off, that coverage goes off and it's got to be replaced with something else. So, does it kind of, one kind of dictate the other? I kind of tend to think it does. Think about how many, billions of bushels are protected with crop insurance, and that number's going down dramatically every day. So I think that just leads to natural selling too.
Sure. Ben, what's on your mind this morning?
Yeah, I love this conversation about crop insurance and futures price being, having been around this industry for a while. I think one of the biggest things is we always talk about how this can affect price, but ultimately when you hear the conspiracy theories, I think it's crazy talk because we've really just disincentivized the producer to sell at those low levels when crop insurance is there. So the offer is gone. We saw the exact same type of price action last year in a very similar time window. It might have come a little bit later. And, that side of the market is protected. And every day we get closer to the end of the month, they're no longer protected. And I think that becomes a vulnerability. But I do think that we will find on a sharper break, we'll find buyers this time around in corn. So,
yeah, we did see this. I mean, we talked a lot about this in August, going into that September 1st notice day where, a lot of our clients, you looked and they were making more money as prices went down, and Dustin talked about this a lot. I mean, the biggest risk was, call it a 4 to 420, rally back to those areas where, you just you gave up money, so there was definitely a big incentive for growers that had big insurance policies and hedges in place to cover those, because the risk was a rally. So now I think we're kind of seeing that. And now, as that put, that put floor, effective put floor through crop insurance disappears, the risk goes back skewed to the downside. So I think that's just a natural part of how big the crop insurance, called put floor is on our markets this time of year, at least.
It'd be interesting to see too. We should get the data here later this afternoon, but just how much was bought this week from a fund perspective, where they're sitting. Cause it feels like they're getting pretty close to neutral, right? I mean, by all accounts from private estimates anyway.
Yeah, they're probably still. I'm sure they covered quite a bit of shorts this week. They're probably still net short a little bit, and we'll see. Of course, it's always a 3-day lag as well. So it's as of Tuesday, and we get it Friday afternoon. So it's kind of old data sometimes too. Yeah, but one thing I would say is this jobs report sent the dollar index sharply higher this morning. So that's one thing to kind of consider. Like the dollar's impact on commodities is still pretty big. So that's one headwind. The real fell as well on the news because it's the dollar strength associated to it. But yeah, I think all of these things are good points. The crop insurance, I think, was a bigger issue last year for a lot of people, like rallying from the price that it did. I think a lot of, the 183 national average yield projection that we're talking about, most people are probably outside of a crop insurance payment anyway, but there are definitely areas of, Minnesota and Ohio that probably were in a payment for those 85% policyholders. And of course, anyone that bought a 95% policy like margin protection or ECO, that would be a bigger consideration there as well too. I think going into another good weekend of harvest and just looking at how dry the forecast is again for the next 2 weeks, we will probably have a lot of bushels pulled out and trying to find a home over the next 14 days. And that's when you look at the rally we've just had, especially for something like corn, and the spreads have narrowed up quite a bit and the flat prices rallied. I think that people remember last year, and they remember that post-insurance timeframe where a lot of people ended up with a lot less revenue than their insurance guarantee provided because the majority of the break happened after October. We fell a significant portion into that February timeframe. And that was significant because it was right before loan renewal season. A lot of cash was needed to be raised, JFM. We think the cash crunch is a bit tighter this year than it was last year, and that maybe that sale comes even a bit sooner where that cash is needed to be raised. And there's also that negative connotation on basis only contracts and DP where growers will say, I don't want to get caught in that situation again last year. I'd rather sell and go buy a call option or find another form of ownership. So if that's the case, if that sale happens much sooner this year, perhaps, we end up hitting a low much faster than Feb like we did last year. We'll see. Time will tell, but that's just one of my thoughts going into harvest.
Yeah. And two, a lot of these bear markets, even if a low is put, they like to go try to test it at some point. So if the crop does come out big, which I think it will, I think we can fine tune a couple of bushels here or there to the national yield. But either way, with a big crop, you got to assume that there's a good chance that, call it between now and end of the year, unless something changes dramatically with, big demand or South America really takes a downturn, you cannot rule out going and testing or even going below these recent lows. So I want to keep that in mind too. Just that'd be kind of a worst case scenario, right? Crop insurance expires and we go make new lows going into the end of the year, loan renewals, all those kind of winter doldrums. So just trying to prevent that kind of pain, or put some kind of, at least some kind of a plan in place to prevent, despair if that were to happen. So,
last year, just looking at a chart here, we kind of put a low in mid to end of September and kind of did start trending higher through the month of October, and actually traded back up to the 100-day, touched it on October 20th at 508. And that was it. We started trending lower into the end of the December contract, and we all know kind of the debacle that the basis only and pricing later contracts did to the core market, to the spreads, all the way into the first of the year. So kind of interesting.
Yep.
Just saw that strength even last year, right? So I agree that Dustin, it's going to be, are we going to see less of that this year? And you would think so, just logically. But you never know, if farmers get a little excited about this rally and decide that, something's changed and maybe they want to try to do that again, we would obviously probably advise against that. And there's better ways to do that. But
yeah.
So.
Well, just a bit of history with what happened last year with the spreads. We had Dees March went off like close to 26 under on just the day before first notice day. That's Dees 23 to March 24. Dees was only 58 under. So it's a 58 cent carry for that 12-month window. And so a lot of people blame that really wide Dees March spread on the river last year being super low right there at the end of that contract. And that makes sense. But the interesting part was JFM was when all those sales came in, and it was really that carry from March 24 to Dees 24 really widened out there in January and February. So it wasn't necessarily the river, in my opinion, at that point in time. It was actually the sale that came. It was that transfer of ownership from grower to commercial, where the market finally said, well, we're getting too many bushels. We need to provide more of a financial incentive for the carry. That came late Feb. And so the Dees was only 58 under. We went 26 under to 51 under on that March Dees. So that was like close to a 77 cent carry if you had just rolled on Dees to March and then March to Dees. That's a very long, wide carry for a 12-month spread. And like I said, if in my opinion, might be that just shifts a little bit sooner because that sale comes sooner.
Well, and the thing is too, like, you have super low river levels right now. And with the forecast, it's going to continue. I mean, a lot of the ditch banks, tributaries to the, Illinois are completely dry, kind of dryest we've seen, at least around our farm for this time of year, sometimes in a summer drought like 2012, but not for right now. So you've got all this, and you're just getting ready to, really ramp up corn harvest the next 2 weeks, especially. A lot of people have been focusing on beans, at least around that area, because of how dry they've gotten. So you're going to have a wide open window. I think people are going to keep going. Spreads have narrowed. Basis is really good, especially if you get past like November, so there's decent things to do here. So I think right now the market's set up where funds have covered. They're mostly in the front contract, which is the December. So that's caused the spreads to go up when there hasn't been enough harvest pressure yet. So now you've got decent basis, flat price rally. So from this level on, if you think about it, you've got crop insurance expiring. So you've got flat price risk. You've got a lot of spread risk, in my opinion, and you've got basis risk. Now, basis and spread risk kind of go hand in hand a lot of times, but there's a lot of scenarios here that you should probably be looking at protecting, especially on extra bushels that you weren't counting on 30 days ago. All these kind of things. It's really worth looking at what all that means to you right now.
Oh, very good. We're going to be just coming into the open here. Ryland, real quick, it's pretty quiet in cattle. We're waiting for cash to develop. And then, the port strike being delayed and them going back to work here should certainly be good news for the hog market as well.
Yeah, I mean, it seems like things really cooled down yesterday. Overall, like we've had this big explosion in price, big jump in open interest pretty much everywhere. I mean, cash sentiments, at least on the cattle side, are really optimistic, but we're starting to see that fade a little bit on the hog side of things. Cash was down about $1.92 in hogs, so I mean, we're just not getting that momentum in the cash market as I think most would hope at this point, or at least to follow the trajectory in futures. So yeah, I mean, at this point, cash trade has been really minimal. Sounded like bids yesterday were right around 184 on, and at this point we're kind of hoping to see 186, 187, but we'll see. Just seemed like something kind of stopped. Market kind of hit a wall yesterday, and I think everybody's just being a little bit cautious right now, just because of the recent investment. Plus, the U.S. dollar starts to rally. Hog market may not like that. I mean, overall the trend is good. I think. Just in general, there's been a lot more newfound interest in the commodity sector in general, especially in the ag products, for a multitude of reasons. So hopefully it continues, but as of right now, I think the market's just kind of waiting for that last fundamental push.
Very good. It's Friday, and so that brings us to the end here. We'll do little Fun Fact Friday, Ryland edition. So everybody buckle up. Who knows what we're going to get here?
Well, I mean, we were talking to a couple growers over this week, and it sounded like tomatoes were getting harvested pretty much around the country. So just, checking out some facts about tomatoes. There was a lot I didn't know that some people refer to them as the love apple. Also, the name originated from the Aztec, which called them tomatil, which translates to plump thing with a navel. So, I mean, kind of found that interesting. I mean, yeah, I agree with it. I kind of feel like we should go back to that. But, the Europeans became really obsessed with these. I mean, who'd have thought so many cultures had so many different names for the same thing? But in Europe, they were referred to as pomodoro, meaning golden apple. So, I mean, I guess that there's some speculation that the original tomatoes in Europe were actually yellow. So that would be kind of strange. I probably wouldn't eat those, but apparently they consider them aphrodisiacs. So in France, I mean, these things were widely popular, just gaining a lot of traction. And by the 1700s, the aristocrats eating tomatoes like crazy, but all of a sudden, a lot of these people started dropping dead. So they were thought for a while that these tomatoes were poisonous, but it turns out that their plates were made of pewter. And so the acidity from the tomatoes as they were eating them was actually getting absorbed into the tomato, and they were dying of lead poisoning. So they got a bad rap towards the end. But overall, I mean, I think it was a good learning experience for everybody. So annually, the U.S. Average American consumes 19 pounds of tomatoes per year. And who would have thunk it that in Ohio, they actually have a state drink, and it's tomato juice. So that kind of was a little strange to me. I don't know what the state drink is of Illinois, but I hope it's not Malort. So
very good.
So plump thing with a navel.
Plump thing with a navel.
That was my nickname in college. Yeah.
I mean, man, the first guy holding that be like, what is this thing? Well, I mean, it's exactly what it is.
I'm gonna order that on my Big Mac. See what they say. Can I get an extra plump thing with a navel?
You're gonna get arrested.
Yeah, seriously. You don't know what you're gonna get at that rate.
Man, fun fact Friday never disappoints.
There
you go. We got open markets here. Well, one more rundown. December corn's down 3.5, 424 3/4. Jan beans are up 3/4 at 1065 as the last. And December Chicago wheat's down 10 1/4 at 593 1/4. We appreciate everybody that tunes in on a daily basis, supports the show. If you get a chance, throw us a like or subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything AgYield. So thanks again to everybody that tunes in every day. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. We hope everybody has a great weekend, and we look forward to talking to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.